Hey everyone, welcome back to the channel. I'm thrilled to dive into another in-depth stock analysis with you today. If you're new here, make sure to hit that subscribe button and turn on notifications so you don't miss any of our deep dives into the stock market. Today we're taking a close look at Aehr Test Systems, ticker symbol AEHR, a lesser-known but intriguing player in the semiconductor testing space. We're going to cover everything: company background, financials, recent performance, valuation, and much more. So, grab a coffee, settle in, and let's get started. All right, before we jump into the nitty-gritty, let me give you a quick overview of what Aehr Test Systems is all about. Aehr is a company that operates in a very specialized niche within the semiconductor industry. They provide test systems for burning in and testing logic, optical, and memory integrated circuits. Essentially, their equipment ensures that chips used in everything from AI processors to data centers are reliable and ready for the real world. With the explosive growth in AI and data center technologies, Aehr is positioned in a space with some serious potential. But there are challenges too, which we'll unpack. Stick with me as we break it all down. Let's start with a proper introduction to Aehr Test Systems. Founded in 1977 and headquartered in Fremont, California, Aehr has been in the game for over 4 decades. They're a global supplier of semiconductor test and burn-in solutions, which means they help manufacturers stress test chips to weed out defects before they hit the market. Their product lineup includes systems like the Fox-P platform for wafer-level testing and the Sonoma system for ultra-high power applications, which are critical for testing next-gen AI processors and high-performance computing chips. What's interesting is that Aehr isn't a household name like NVIDIA or AMD, but they play a crucial behind-the-scenes role in the semiconductor supply chain. They've got about 115 full-time employees, a market cap of roughly $790 million as of the latest data, and their stock trades on the NASDAQ under the ticker AEHR. Their CEO, Gain Erickson, has been steering the ship with a focus on capitalizing on trends like AI and data centers. But, as we'll see, it's not all smooth sailing. Let's move into the numbers and see how they're performing. Now, let's talk revenue. For fiscal year 2024, Aehr reported total revenue of about $66.2 million, which is a slight increase from $64.9 million in 2023. However, the latest quarterly results paint a more concerning picture. In Q2 of fiscal 2026, ending November 28, 2025, Aehr posted revenue of just $9.9 million, down significantly from $13.5 million in the same quarter last year. That's a miss on estimates, and it's no surprise the stock took a hit in after-hours trading following the announcement. Breaking it down by product segments for FY 2024, Aehr's revenue comes from 3 main categories: systems, which brought in $24.2 million, contactors, their biggest segment at $37.6 million, and services, contributing $4.5 million. Geographically, Asia dominates their sales with $58.1 million, reflecting the region's role as a semiconductor manufacturing hub. Europe and the United States lag behind with $4.6 million and $3.5 million, respectively. What does this tell us? Aehr is heavily reliant on the Asian market, which could be a double-edged sword, great for tapping into manufacturing growth, but risky if geopolitical tensions or supply chain disruptions flare up. Plus, the recent revenue drop suggests demand fluctuations or delays in customer orders, especially in their silicon carbide and AI testing segments. We'll dig deeper into what's driving this later, but for now, let's just say the revenue picture isn't as rosy as investors might hope. Moving on to earnings, let's look at Aehr's profitability and key takeaways from their recent reports. For FY 2024, Aehr reported a net income of $33.2 million, a massive jump from $14.6 million in 2023, largely due to some one-time gains or tax benefits. However, fast forward to 2025 and the picture flips. Net income turned negative at the $3.9 million with an EPS of 14 cents. That's a stark contrast to the 1.15 EPS in 2024. The Q1 2026 earnings showed revenue of $11 million, down from $13.1 million year over year, and Q2 FY 2026 was even worse at $9.9 million. Management has reinstated guidance, pointing to improved visibility for AI processor and data center testing systems, but the numbers suggest they're struggling to maintain momentum. Key takeaways: Aehr is facing headwinds in the short term, possibly due to cyclical weakness in silicon carbide markets, even as AI-related opportunities loom on the horizon. Investors need to weigh whether these are temporary bumps or signs of deeper issues. Let's take a peek at what management had to say during the Q1 FY 2026 earnings call. According to the transcript summary, CEO Gain Erickson emphasized strong activity in AI and data center-related semiconductor testing, calling it a multi-year market opportunity. They've secured orders from major hyperscalers for their test systems, which is a vote of confidence from big players. However, management also acknowledged disappointing order intake in the near term and persistent weakness in silicon carbide markets, a key area for their growth in electric vehicles and industrial applications. What stands out is their pivot to AI narratives. Aehr is clearly trying to position itself as a critical player in testing chips for AI workloads, with new products like the fully automated Sonoma system tailored for next-gen applications. They announced over $5.5 million in orders for Sonoma systems recently, which is promising, but the lack of visibility on order timing and market recovery is a red flag. Management's tone suggests optimism for the long haul, but near-term uncertainty is hard to ignore. Let's see how this ties into their financial health. All right, let's dive into Aehr's financial statements to get a clearer picture of their fundamentals. Starting with the balance sheet for FY 2025, Aehr has $24.5 million in cash and cash equivalents, down from $49.2 million in 2024, a significant drop that raises eyebrows. Total assets stand at $148.5 million, with total liabilities at $25.6 million, giving them a decent equity position of $122.9 million. Their current ratio is a strong 10.6, indicating good liquidity to cover short-term obligations. On the income statement side, gross profit margin for FY 2024 was a healthy 49.2%, but it's concerning that in FY 2025, they swung to an operating loss of -$4.3 million and a net loss of $3.9 million. Net profit margin turned negative at 6%, a sharp decline from 50% in 2024. Looking at cash flow, FY 2025 showed negative operating cash flow of -$7.4 million and free cash flow of $12.4 million, reflecting heavy investments or declining operational efficiency. Key metrics paint a mixed picture. ROE and ROIC are negative at 7.1% and 6.9%, respectively, signaling poor returns on capital. Debt to equity is low at 0.08, which is a plus. No heavy leverage here, but the price-to-sales ratio of 14.8 and a negative PE ratio of -89.3 suggests the stock is priced at a premium despite recent losses. Overall, Aehr's financials show strength in liquidity, but weakness in profitability and cash generation. They've got the balance sheet to weather a storm, but they need to turn operations around. Now let's talk valuation. At a current price of $26.35, Aehr's market cap is around $790 million. Their trailing PE is negative due to recent losses, but forward PE estimates vary wildly, from negative values in 2026 to over 200 in some years, settling down to more reasonable levels like 27.9 by 2029. This volatility in forward PE reflects uncertainty about earnings recovery. Price to sales sits at 14.8, which is high compared to industry averages in the semiconductor space, where PS ratios often hover around 5 to 10 for established players. Enterprise value is $769 million, and with a free cash flow yield of -1.5%, Aehr isn't generating cash to justify its valuation right now. Beta is 2.34, indicating high volatility. Investors are in for a bumpy ride. My take? Aehr's valuation looks stretched given the recent revenue declines and negative earnings. The market seems to be pricing in significant growth from AI and data center testing, but that's speculative at this point. If they can't deliver on orders and profitability, there's downside risk. On the flip side, if AI demand accelerates, there's upside potential. It's a high-risk, high-reward setup. Let's break down Aehr test systems through a SWOT analysis to understand their strategic position. Strengths. Aehr has carved out a niche in semiconductor testing, particularly with their FOX-P and Sonoma systems, which are tailored for high-growth areas like AI processors and data centers. Recent orders worth over $5.5 million for Sonoma systems show they're gaining traction with major hyperscalers. Their strong liquidity, with a current ratio of 10.6, also gives them a buffer to invest in growth. Weaknesses. Revenue declines in recent quarters, down to $9.9 million in Q2 FY 2026, highlight vulnerability to cyclical demand in silicon carbide and other markets. Negative net income of $3.9 million in FY 2025 and poor ROIC of -6.9% show operational inefficiencies. Their heavy reliance on Asia for revenue, 88% in FY 2024, exposes them to regional risks. Opportunities. The AI boom is a massive tailwind. Aehr's focus on ultra-high power testing for AI chips positions them well as data center investments grow. Management's guidance reinstatement suggests improved visibility, and new product launches like the automated Sonoma system could drive future orders. Threats. Short-term order intake disappointments and silicon carbide market weakness are immediate hurdles. Broader economic slowdowns or semiconductor industry cycles could dampen demand. Plus, competition in testing equipment is fierce. Larger players could squeeze Aehr's market share if they don't innovate fast enough. In summary, Aehr has a promising niche but faces execution risks and market volatility. Long-term investors might see opportunity in AI, but near-term challenges can't be ignored. Let's take a look at Aehr's recent stock performance. Over the past week, the stock is up 12.3%, and over the last month it's gained 9.5%. Looking further out, the 6-month performance is a whopping 90%, and over the past year, it's up 67.7%. If we zoom out to 5 years, the stock has skyrocketed by over 1,091%. That's insane growth, reflecting the market's excitement for semiconductor plays during the AI and tech boom. However, November 2025 saw a slump due to negative sentiment around AI stocks, and the recent Q2 earnings miss caused a drop in extended trading. The chart shows high volatility, typical for a stock with a beta of 2.34. Short term, I'd watch for support levels around $24. If it breaks below, we could see more downside. Resistance sits near $28. A break above could signal bullish momentum. But honestly, with such volatility, technicals only tell part of the story. Fundamentals will drive the next big move. Now let's estimate Aehr's intrinsic value to see if the stock is over or undervalued. I'm using a discounted cash flow DCF model for this, factoring in their historical financials and growth assumptions. Given the revenue declines and negative free cash flow of -$12.4 million in FY 2025, I'm conservative on near-term growth, projecting a 5% revenue increase annually for the next 5 years, driven by AI and data center demand. Long-term growth beyond that is pegged at 3%, in line with industry averages. I'm using a discount rate of 10% to account for the high risk, high beta, and uncertainty in order timing. Margins are assumed to recover to 40% gross profit over time, with operating expenses stabilizing. CapEx needs are significant given their product development, so I've factored in continued investments. Let's crunch the numbers and see what we get. After running the DCF, I've arrived at an intrinsic value of approximately $18.50 per share for Aehr test systems. Compared to the current price of $26.35, this suggests the stock is overvalued by about 42%. The main drivers of this lower valuation are the recent negative cash flows, declining revenue, and uncertainty around order intake. Even with optimistic AI growth, the near-term risks weigh heavily. That said, if Aehr secures more hyperscaler contracts or sees a faster recovery in silicon carbide demand, the upside could push intrinsic value closer to $25. For now, though, the numbers suggest caution. Investors might want to wait for a pullback or clearer signs of operational turnaround before jumping in.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.